Welcome to The Explainer. So, we got to talk about this wave of fear that's suddenly washing over the financial world. You're probably wondering, is this it? Is the bubble finally going to burst? Or is there something else going on here?
So let's just jump right in. I mean, does it feel to you like just overnight, all the big names, Bloomberg, CNBC, started singing the same tune? It's all doom and gloom, right? Warning about sky-high prices, a huge crash coming. But what's the real story here? What's actually behind all this noise?
All right, first things first. Let's look at the actual evidence they're pointing to for all this fear. And, a perfect place to start is, you guessed it, the wild world of crypto.
So Bloomberg's basically saying there's a perfect storm hitting crypto right now. They're pointing to a really, really rough October, and now even more downward pressure. It's got investors spooked, and you're seeing them pull their money out.
And look, it's never just one thing, right? This is a whole mess of powerful forces hitting all at once. You've got the US dollar getting stronger, which isn't great for assets like Bitcoin. You've got these huge hacks in the DeFi space, stuff like the Balancer protocol hack. Then there are literally billions in liquidations wiping people out. And on top of all that, the Federal Reserve is staying hawkish, which just makes risky bets way less appealing.
But here's the thing. This isn't just a crypto story. No way. These warnings are pointing right at the heart of the US stock market. A lot of analysts are looking at it and seeing the exact same signs of overheated.
And this is really the main story they're selling us, that valuations, especially for US stocks, have just gotten, well, dangerously stretched, like a rubber band about to snap. And that's setting the stage for a big, maybe even painful pullback.
And check this out. This number, 36%, it just perfectly shows the huge risk everyone's talking about. We're talking about just a handful of US tech giants, right? The Magnificent Seven. They now make up a mind-boggling 36% of the entire market. Think about that. When so much of the market's value is tied up in so few companies, even a tiny stumble from one of them can cause massive waves.
So naturally, this massive concentration leads us straight to the hottest and maybe the most overhyped sector out there right now, AI.
So here's the billion-dollar question, right? Is all the AI hype actually matching up with the real-world returns? Is there this huge gap opening up between the incredible dream of AI and the actual money it's making for these companies?
And this quote from Market Ear Analytics, man, it just hits the nail on the head. Companies are spending an insane amount of money. We're talking billions and billions on AI. But when you look at the actual numbers, you have to ask, where are the profits?
Okay, let's take a company like Meta. Perfect example of this. They've got an annual turnover of around $70 billion. Huge, right? But with all that massive investment in AI, how much extra revenue is it bringing in? Only about 3 to 5 billion. I mean, that's a ton of money to spend for what seems like a pretty small return, at least for now.
And if you zoom out and look globally, the difference is just, wow. The top 10 tech stocks in the US are valued at an incredible $23 trillion. Now, compare that to China. Their top 10, just $2.4 trillion. It really paints a picture, doesn't it? The US market looks super concentrated and super expensive, while other places, like China, look almost cheap by comparison.
Okay, so just when you think the argument for a crash is totally overwhelming, the actual bosses of Wall Street step in, and they have a very different and pretty surprising take on all this.
Now, when you first hear this, you're probably thinking, oh boy, here we go. David Solomon, the CEO of Goldman Sachs, is saying a 10 to 20% drop is likely. I mean, that sounds like he's confirming everything we've just been talking about. But, and this is a big but, there's a twist.
And here it is. That same guy, David Solomon, goes on to say that this drop, it's not a crash we should be scared of. He calls it a normal feature of a long-term bull market. So in his mind, this is all just part of the plan. It's healthy.
And get this, he's not the only one. The CEO of Morgan Stanley basically said the same thing. He says investors should welcome these 10 to 15% pullbacks. He calls them healthy tendencies, not a crisis. So the message coming from the very top of Wall Street seems to be, everybody just calm down, don't panic.
So, what do you do with all this? You've got these completely opposite signals. How does a regular investor even begin to sort through the noise? Well, some people try to ignore the headlines and look at specific technical indicators instead, just to ground themselves in the data.
Take the crypto world, for instance. Analysts at places like Matrix Sport, they point to simple tools, like the 21-week moving average for Bitcoin.
Look, it's not a crystal ball. Nobody's saying that. But it's a rule that's been around for a while, and it can help you manage your risk and honestly, just sleep a little better at night when things are going crazy.
So at the end of the day, what we have here is a classic tug of war in the market. You've got these really powerful arguments just pulling in completely opposite directions. Okay, so on one side, you've got all the scary bearish signals, right? Sky-high valuations, a market that's way too concentrated, and all this money being thrown at AI with not much to show for it yet. But then, on the other side, you've got the biggest names in finance basically patting us on the shoulder and saying, hey, it's all good. This is business as usual. This is just what a healthy long-term bull market looks like.
And that leaves us with the big, crucial question for you. In a world that is just flooded with information, and let's be honest, a lot of deliberate fear-mongering, how do you tell the difference between the noise and the actual signal? The point here isn't to give you a simple answer. It's about giving you a way to think critically about every headline you see. That's your Daily Edge. See you next time.